Hey, my name's James Nicholson and welcome to my YouTube channel. This is the property news for this week and it's another busy week. So much stuff has happened this week. We've had the Federal Reserve having their meeting. We've had arguments with Donald Trump and the Federal Reserve, which was interesting, and that needs to get resolved pretty quickly. I think we've got landlords. I've got an update that I haven't done a video on yet about landlords just not interested in updating their properties and their EPC ratings. I'm going to tell you why that's happening. We've got the Bank of England that are potentially cutting next week. That's going to be a big news story. I'm going to talk to you more about that. We've got tenants that could move into your property for no cost and much, much more. Now, if you're new around here and you haven't done already, this channel talks about everything you need to know in the property market. So why not subscribe to the channel over there and hit that bell notification. We've got 4,000 new subscribers just in January, which is insane. So thanks to everyone that's new around here. And let's get some more views on this video. How do you do that, I ask? Well, very, very simply, smash like, tick or like, do something to that like button. That helps with the YouTube algorithm. It takes you a second, but it shows YouTube that you're interested in content like this and helps us find more people like you. So, what is going on? Well, there's a lot. Every week seems to be a lot going on at the moment. First, we'll talk the Federal Reserve. So the Federal Reserve, they had their meeting and it was interesting because Donald Trump, he was speaking at the Economic Forum in Davos and he made it very clear that he's going to force the Federal Reserve to drop interest rates, to drop them sharply. And he said that in front of the world. The Federal Reserve had their meeting and they ignored that. They have not cut rates and they've kept their rate at 4.25%. Now, what was also interesting in there, they've really changed their language and they've gone from potentially 2 cuts in 2025 to now potentially no cuts in 2025. In fact, some people think that they could increase rates. Now, a lot of this is down to things that are happening in America at the moment. One is the tariffs. It's tomorrow that potentially tariffs go on Canada and Mexico. It's crazy that we're a few days out. Maybe since recording this has changed, but we're a few days out and we don't even know if this is definitely happening. That's not good. Potentially those tariffs could cause more inflation in America. You think if you import some timber, some lumber, and at the port, 25% tax is put on that, that's going to be pushed onto the consumer or the businesses that buy that. There's another thing that the Federal Reserve wants to keep an eye on, and that's the deportations that are happening, because there are places like Florida, like California, where the fruit that needs harvesting right now doesn't have staff because they're not documented legal workers, so they're hiding right now, and the food is rotting in the fields. That also could push prices up significantly. So these are things we've got to keep an eye on. They might all play out and it all gets sorted. But right now, there is some uncertainty. And that's why the Fed can't commit to cutting rates until they see what happens off the back of this. Now, how does that impact the Bank of England? Because that's what I want to talk about as well. Well, the good news for us over here is that we are 2 cuts behind. So we can do 2 cuts at the Bank of England and not impact the currency too much because we'll still be in line where the Americans are. We're at 4.75, they're at 4.25. We can do 0.25% cuts and still be in line with the Americans. Now, it's likely that on February, even the 6th, that will happen. And that's what the markets are expecting. And I think we will get a 0.25% cut next week because the economy in the UK is really not looking strong at all. Unemployment is rising. We're on the verge of a recession and things really aren't optimistic for a lot of people. Another story that we covered this week is about tenants moving in at no cost. Now, this worried a lot of you. There's a lot of comments on that video. I think more than 10,000 people viewed that video. And in the Renters' Rights Bill, Knight Frank correctly read that and interpreted that a tenant could move into a property and you wouldn't have taken any payment. In fact, if you take a payment early from them, let's just say a week early, a deposit and a payment for them to move in, technically, with the Renters' Rights Bill, as it stands, as it's worded at the moment, that would be illegal. Now, this is to prevent people that are scamming people, that are taking deposits, taking rent. Maybe they don't own the property or causing problems for tenants. But a lot of landlords aren't happy with this. Imagine someone moves in and immediately doesn't start paying rent, and you haven't got your deposit up for them, you haven't got the rent for them, and then they suddenly have all these rights, and you're going to have to go through courts for months in order to get them out. This isn't good. Now, could this get reworded? Potentially. It could be a mistake and it gets sorted, but you'd think that with all the people that are reading these bills, that they would have figured this out before it went public. And a lot of people think it potentially could get left in, which isn't good. So that's something that needs resolving. I've made a more detailed video on that earlier this week, so do go and check out that one. Leasehold reform. This was a good start, because I know in the comments you've been saying not so much good news at the moment. Well, this was a little part of good news. And so with the leasehold reform, what they did was they activated part of the bill. They've made that law this week. So immediately that is now law. And that is the part where you don't have to wait 2 years in order to renew a lease. So let's just say you buy a property and it's got a short lease. There was a rule there that you had to own that property for 2 years before you could extend the lease. It was a silly rule, doesn't really benefit the freeholders or the leaseholders. And so that's been scrapped. It was an easy, quick win. No one was really arguing either way on that one. So that was step one of the Leasehold Reform Act getting implemented. Now, that's good, because now they can focus on the next stage. And this is what will happen. They'll tick off little bits as we go forward. So that moved forward really, really well. So leasehold reform, do check out that. I made another video on that one. Airbnb. So a lot of councils have no idea how many Airbnb properties are in their council area. And so what the government is proposing is that each council will make a list, and you have to register if your property is listed on Airbnb. Now, what this is likely to do is highlight to some councils how many properties there are there and make them worried and think, we need to get some of that back for rental stock, for social housing and various other things. And what I predict will happen is something similar to what happens in London. So in London, you can only rent your property for 90 days on Airbnb. It's a very strict rule. Airbnb auto enforce it, and people do get around it by listing on other sites and stuff like that. But it is a strict rule, and I think that other areas, if they see a huge amount of Airbnbs in their area, they could start to make it even tougher for people that run Airbnb properties. So that's the point of the Airbnb register, and we'll see how that goes. Mortgages. What happened this week in mortgages? Not a lot. It was... nothing really happened this week. This is one of the most uneventful weeks on mortgages. We didn't have any up, we didn't have any down, didn't have any sideways. Most places, mortgages stayed the same this week as they were the last week. Before that, we've had every single week rates going up, rates going down, rates going sideways. This week, it has been a fairly stable week, so not really much to happen there. Two more things. There's a lender, a buy-to-let lender. They're called Aldermore. And I think you do have this already. You're going to start seeing this more frequently. They're offering better rates for people with good EPCs. A good EPC is A, B, or C. That's what they class as good. And they will give a better rate. It's 0.1% lower than other rates that they offer. Now, other lenders are doing this, and I think more lenders will move into this level in order to push more landlords to improve their EPCs. lenders will be looking at as the risk profile. So the risk here is that if you're a lender and you have lots of people with an EPC of F or E, for example, when the government then implements the EPC level C, these properties could go down in value, could go into negative equity. They could be harder to rent, and that's a risky loan in that scenario. So these lenders are trying to attract more into their stock A, B, C as EPCs. And I think you'll see some lenders do this already. I think you'll see other lenders do this as well. Here's another thing. The last thing is landlords and EPCs. So we have right now until 2030 to get our properties up to a level C, EPC C. If you can't do that, the proposal at the moment is you wouldn't then be able to rent your property out. Now, if that actually happened right now, that would be carnage because half of rental properties aren't at that level. What they're also proposing is that if you can't get it to that level, you've got to spend a minimum of £10,000 in order to do that. Now, landlords that have been surveyed, thousands of landlords have been surveyed on this. Only 6% of landlords right now are doing the work in order to improve their properties up to a level C. Only 6%, which is crazy. So that means that most are ignoring this. And the reasoning behind that in the survey is that most think that either this rule won't happen in 2030 or it will get kicked back even further. And that is potentially what the government are hinting at now. Is this week, if you read the news, there's Rachel Reeves talking about extending Heathrow, and the government is getting pressure to take off some of these green incentives and stuff that they're pushing in order to get the economy going, because it's not going well at the moment. So it'll be interesting to see, and that's why a lot of landlords at the moment have a gut feeling that this won't get implemented, that the government will back down. Remember, the Conservatives did exactly that. They removed it at one point at the end. They just said, look, we're going to scrap it. It's not likely to happen. And so that was a good win for landlords. Labour brought it back in. But the thoughts are that potentially this could get removed. And that's why a lot of people are just saying, I'm going to wait and I'm going to see what happens with this. So an interesting week. The big things to watch out for next week are the Bank of England meeting. That is going to be the big one next week, where we want to see if the rates cut. But not only that, who cares if the Bank of England cut rates? Do the mortgage lenders pass that on to you? Yes, of course they will if it's a tracker, but do other lenders pass it on to you and do rates drop? We'll cover that next week, and that's a reason to subscribe so you know exactly what is going on. Do smash like on this video so more people watch it. Do comment, even if it's just to say hi. We personally reply to every comment on the channel. And check out all the other content on my channel, including this video right here.